Think Realty Nation? It's your host, Abhi Golhar. Welcome to the Think Realty podcast. I'm excited to have the conversation today about self-directed IRAs. And if you're a real estate investor and you're wondering how you can raise money and where you can raise money, this is the show for you. We're going to do a deep dive into the tax advantages of IRAs and why self-directed IRAs and folks that hold these accounts would be a potential good way to go find some additional capital for those deals that you want to buy right now because, you know, you're looking for the next deal. I get it. I am too. And we need to make sure we have some cash on the side and some investors ready to help us buy these deals. So that's the topic of discussion for today. I'm excited to have that with my good friend Jason DeBono. And I can't wait. This is going to be fantastic. And before we do that, I want to give a huge shout out to Residential Capital Partners, who is the sponsor for today's podcast. Residential Capital Partners is a leading hard money lender with a national scope and a local presence in each market they serve. Their partners and loan affiliates have flipped well over 1,000 properties themselves, and they know your business. You want to visit them today at residentialcapitalpartners.com. Jason DeBono, NuView IRA. Let's get to it, man. How are you doing?
I'm doing well. How are you doing? Thanks for having me.
Hey, you got it. I think now this is the second or third time we've had you on the show.
Yep.
Always fun talking about self-directed IRAs with you. Give us a quick breakdown. I don't know where. So I have Invisalign every now and then, and so I'm just like I'm saying weird words. See, I did it again. that don't even exist. I even say my name incorrectly. Anyway, give us a breakdown. Who are you? What do you do?
Sure. Jason DeBono, NuView IRA. We help people buy and sell real estate and other non-public investments with retirement money. So we have a trust company based out of South Dakota, and that grants people the ability to take retirement money and do the unique stuff, the fun stuff. And if you're like anyone that's been looking at the stock market over the last 90 days, I think everyone's looking with the big old question mark of what do we do and when do we do it and why do we do it and how do we do it? And if you're like me and most other people, it may not be the best place for your retirement money. So we help people take the money and move it into investments that are a little easier to know and understand and may not be as immediately impacted as things shift and change in this kind of COVID environment that we're all living in.
I've seen a lot of folks that will say, hey, I'm so done with equities. I'm done with stocks. I'm done with my mutual fund. I'm dumping all of it, but I just don't know where to put it now. And I don't know how to, really make it work harder for me. And that's really, quite frankly, where self-directed IRAs come in. So let's talk about the power of a tax-advantaged self-directed IRA. Could you talk about some of those points for me?
Sure. So, most of our customers, they don't come to us to buy an investment they've never bought before. Most of our customers have used their personal money to buy some sort of investment that's not publicly traded. So a piece of real property, maybe they've loaned money to a friend or invested into a private business. These are things we commonly do with our personal money or taxable money. But most of us aren't aware that there actually is an ability to use retirement money to make those same investments. And so not only is it simply a way to say, I don't want to buy stocks, bonds, mutual funds, right? I don't have a clue, what the real fundamentals are of the market, nor am I going to try to time it, but they don't know where else to go. And so there's a simple opportunity to take your knowledge and experience of these personal investments, right? Again, real estate and private loans, private companies, and simply tuck them into an IRA. The beauty in all of this, and the part that people don't, necessarily know is even possible, is they get to buy the money or use the money from their retirement plan and maintain all the tax benefits of that IRA. So to quickly illustrate, if you were to take $1 and double it for 20 years, right? Just $1, doubling it every year for 20 years. So $1 becomes 2, 2 becomes 4, 4 becomes 8. If you were to do that in a taxable environment where you had a 25% annual tax, you'd end up with about $75,000. If you made the same investment for the same amount with the same return, right? Doubling every year for $1 or for 20 years. If you did that same investment, but just did it inside a retirement account, you'd end up with over $1 million. So the difference is nearly $1 million more over that investment time span, not by investing into something unique or different, not by putting more money in, but simply choosing the investment inside a tax-deferred or tax-free account like a retirement plan versus doing it with your personal money. So, it's an unbelievable opportunity to get Uncle Sam out of your pockets and invest in what you know and understand.
I absolutely love that. So, I mean, but Jason, at the end of the day, I'm still going to have to pay taxes when I withdraw that money later, right? Shouldn't I be paying taxes the entire way through?
So if you look at IRAs, and I think what happens, I mean, so many people, they don't really know what IRAs are, and I don't mean that in a bad way. I mean, the good news is it's just plain ignorance, and thankfully ignorance is curable. And we're all in this information age where we get all this stuff at our fingertips, yet no one actually understands the right vehicle, right? We go on all these apps and try to figure out how to be the world's greatest investor, but we don't really step back and say, well, what are the vehicles for me to carry or hold these investments in? And back to your question, IRAs are not just pre-tax vehicles. So there's a Roth IRA. We're going to talk a little bit here about the solo 401k, which has a Roth component to it. But all of those components allow you to put money in after tax. So the government is really giving you a choice. They're saying, put the money into a pre-tax account. We won't tax it, right? We'll give you a tax deduction, and you can pay us the tax later when you take it out. But they also say the alternative is you can put that money into a retirement account, pay me the tax right up front on the amount you put in, and whatever it grows to is completely tax-free. So back to my example, if you put that dollar into a Roth IRA, doubled it every year for 20 years, you'd have over $1 million tax-free.
Yeah, I like the sound of that. I think that sounds great. That's awesome. So let's talk about some of these vehicles. You have your traditional, I can have a self-directed traditional IRA, right? I can have a self-directed Roth IRA. I can have a self-directed 401k, a self-directed solo 401k, and you said something about a self-directed Roth 401. What was that? A Roth 401k?
Yeah.
Okay.
It takes a little bit of all of those and marries them all together, which is, the plan of all plans if you qualify, for sure.
Awesome. So I know we want to talk about the solo 401k. I have maybe a few more questions for you about the solo 401k, but give us a quick little rundown. What is a solo 401k?
Yeah, so let me start by kind of just taking one step back to the 401k. So I think, everybody listening today kind of understands the basics of a 401k. It's an employer-sponsored plan. So your company says, Jason, as an employee, you get to put money into this plan out of your paycheck, right? And then we'll make a matching contribution, right? 3% is pretty standard. So, I put in 5% of my paycheck. They take it out of my, my pay every Friday or however I get paid. They throw it in my 401k. And then at the end of each year, the employer comes in and says, hey, we'll throw 3% on top of that. It's an awesome tool. The drawback is the 401k plan is going to be pretty limited because it's your employer's plan. So you don't have a lot of flexibility. You can't really invest it into what you want. You're going to have a small grouping of mutual funds that you're going to be able to invest into. That's a 401k. A solo 401k says, we're going to get all the same opportunities that a 401k plan offers, right? Payroll deduction, so you get to put money in, and the ability for the employer to put money in, which is exactly how 401ks work. The solo in 401k or solo 401k means that you are the employer and you don't have employees. So for everyone that's listening that's in any self-employed industry, those that are real estate investors can, depending on how you take your earnings, can be self-employed. In fact, most make themselves self-employed to qualify for this plan. But you're basically taking a 401k plan that you would expect at an AT&T or a Microsoft level, and you're boiling that all the way down to a plan that's just for you. And so if I'm a real estate investor, right, I've got no employees, own a couple properties, right, I take a small property management, payroll to make myself self-employed, I can contribute up to $19,000 dollar for dollar directly to a Roth.
Wow.
And then my employer, which is also me, can come in and add to that, not just up to 3%, up to 25%. So if I show a $30,000 of earnings, right, my employer can also put in 25% of that 30,000, which I think is $7,500. So I can put in 19. My employer, which is me, kicks in 7,500. Total contribution of 26.5 against total earnings of 30 grand. And it's just a powerful tool. That's how you get the money in. We can talk about what to do with it while it's in there. But that 19,000 I put in as an employee, I can elect to pay the tax up front and never pay tax on a dollar of the profits that money generates for me.
Yeah, that's pretty awesome. I was thinking about this, and I'm doing the math, and so you have to qualify for this. Obviously, it's not you just don't sign up for it and you just don't get it. You have to qualify for it, and
That's right.
if you employ yourself through your business, you have to show payroll and you have to meet certain standards, right? So it's not just
Yeah,
a overnight
and
thing.
we could spend, a lot of time, and I'm not smart enough from an accounting side to kind of understand exactly where the line is. From a basics, of whether or not you can qualify, yes, you have to have
Yeah.
some form of self-employed income that's reported as not passive income, but some form of self-employed income. And as long as you meet that criteria, typically people in that camp, they don't have employees. I mean, they're generally an investor of some type. Then they would meet the criteria to qualify.
That's incredible. So that's the first part of the equation, right? The first part of the equation. There are many vehicles that you can use, and I highly recommend going to NuView Trust's website. Jason, that website is
NuViewTrust.com.
sweet. So go to NuViewTrust.com and learn about the different vehicles that you can use to get in and to invest into your own self-directed IRA. So that's the first part of the equation. Now, Jason, let's talk about the second part of the equation. That part of the equation is if you are in need of financing and you got all these people over here that NuView and whomever, I mean, they have self-directed IRA accounts and they've got X hundreds of thousands of dollars in it. And you're a guy now that's looking for financing.
Mm-hmm.
There's an educational component of the investor saying, hey, you should consider moving some of your money over to a self-directed IRA because it gives you all the tax benefits, et cetera, and then you can invest with this project that I'm working on. So that's the part of the equation I want to start talking about. What's the best way to go about doing that? How do I connect those dots?
Sure. And you hit on something that's such a fantastic strategy, and it's underutilized, right? There's trillions with a T of dollars sitting in retirement accounts that are just waiting for the next right investment. So when we talk about other people's IRAs, right? So that kind of if you're out in the investment market, people call it OPM, right? Other people's money, and the ideology is very simple. It says I'm really good with deals, right? I just need the money to finish the deal. So part A is finding the right deal. Part B is going out to the marketplace, my circle of friends, center of influence, right? And asking around and inviting them to participate in my deal. Everything that we just talked about is the same. It works no differently because it's an IRA. But what does get different is the conversation that you have. So if you're someone that puts together deals and you can find them and you just need OPM, right? Other people's money. One of the things that we don't suggest or recommend is trying to find IRAs. Now, that may seem counterproductive since we're in the business of providing custody to IRAs, but when we say that, it's not that we don't want IRAs, it's that don't go look for them, right? It's very hard to figure out who has an IRA, who doesn't, and conventional wisdom may tell you that wealthier people have IRAs, and we find that there's really not a lot of correlations. What we find is that the people that are most successful in using IRAs as a tool for raising capital, they're just simply good at raising capital to begin with. So they identify the right investment, they structure it in a way that's best for all parties to win when it's all said and done. And then when they're out talking to people about the opportunity, whether that's friends, family members, whether that's associates, acquaintances, people they're sitting next to at a bar, whatever the legal limitations are on their offering, we simply recommend adding in the language of, did you know you could use your IRA? Because the deal has to stand on its own 2 feet, right? If I approached you, Avi, and said, hey, I've got a deal, I need $100 grand.
Yeah.
Whether you give me your personal money or IRA really is secondary, right? You got to like me and you got to like my investment first. But what can help you get you over the finish line is 2 things. One, you may love me and love the deal, but not have the liquid cash available. So by telling you your IRA is permissible, right, you may not realize that the $100 grand you've got from your 5 years or 10 years of working in industry with a 401k can be used. The second thing is that I can help you understand how your investment with me by being through your IRA is tax advantaged. So I can
That's
talk
right.
to you about that double in a dollar, right? And how you'll end up with a lot more money and a new opportunity. So find the right people. Don't worry about their IRA to start. Get acquainted with the individuals, help them understand you and the deal. And once there's some excitement or interest level there, then certainly let them know the IRA is a tool, and sometimes the best tool, but at a minimum, a fantastic tool for them to participate in that deal.
Jason, this has been really informative, and I'm glad we talked about the solo 401k, because now, after all of this, and I'm driving home, I'm probably going to call you, and then I'm going to say, how do I do this entire solo 401k thing? And the fact that there's a Roth component is even better, because anything that has a Roth attached to it just means I'm paying taxes now for a tax-free future. And that's incredible to me.
Yep.
So I appreciate the time. I appreciate the insight. This was fantastic. Everyone, if you want to go check out Jason and his team at NuViewTrust.com, that's the website. Understand how self-directed. Like if you have a lot of money sitting in cash on the sidelines right now, understand how self-directed IRA can help you change the game for your financial future. And if you are a real estate investor that's looking for that tool for your to aggregate capital, I guess would be a good way to do it, then your investors could lend you money through a self-directed IRA and create a very tax-advantaged opportunity. So, Jason, thanks so much for the time. I certainly appreciate it, man. This was fun.
Hey, Avi, thanks so much. Good to be here, and enjoy. Take care.
Hey, you too. Thanks a lot. I appreciate it. I want to let you know that this segment is brought to you by Real Property Management, which is the largest residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. All right, we're talking about foreclosure buyers responding to COVID-19, and this is an article written by Darren Bloomquist with Auction.com, the chief economist at Auction.com. He's a super great guy, and he wrote this article for the ThinkRealty.com magazine. So you want to go online, check it out. It has a lot of data, but essentially it boils down to a couple things. One, quote, the Auction.com second quarter 2020 foreclosure buyer insights report is based on two different surveys, and each sent to roughly about 9,000 buyers during the pandemic. And also before the pandemic. And here's what they found. That 61% of investors now say that online auctions are their top source for finding inventory, compared to that same number, except that number was 29% back in February before the pandemic. So it's crazy, right? Now there are a whole lot more investors that are looking online for these opportunities. That's a really big jump. That's more than a double. 29% to 61%. That's like almost double. That's more than double. Just a little hair over double. It's crazy. Single-family rental investors and small volume investors are more optimistic in their outlook, with more than half of each of those categories planning to still increase or keep property acquisitions the same despite the pandemic. So what does this mean for real estate wholesalers? That you're not going to go out of business. So that's okay, right? Like there's still opportunity. Your buyers are still going to be there. What does this mean for real estate investors and buyers? That there's still opportunity. At the end of the day, last time I checked, it's not like home values were taking a nosedive. And we're not seeing a crazy housing crash at all. We're seeing a little bit of a correction that's expected, but it's not doing that. It's not taking a complete nosedive. So let's be very careful. Let's be very, very intentional with the kind of data that we're looking at. Larger volume investors, those investors that are purchasing between 6 and 20 homes a year and or more than 20 homes a year, are about twice as likely as smaller volume investors to expect home prices to decline later this year. So the larger volume investors are being a little more bearish. Your smaller investors are being a little more bullish. So I'm kind of interested to see where this is going to kind of hash out later, like where the market will converge to. But I also don't think it's going to be one of these things. Anyway, I want to hear what you think, because at the end of the day, that's what matters. What's happening in your neck of the woods? Get in touch. You can find me anywhere online at Avi Golhar, or visit thinkrealty.com. Ladies and gentlemen, Think Realty Nation, this podcast was brought to you by Residential Capital Partners, a leading hard money lender with a national scope and a local presence in each market they serve. Their partners and loan affiliates have flipped well over 1,000 properties themselves, so they know your business. Visit them today at residentialcapitalpartners.com. Well, you heard it from Jason at NuView IRA. NuViewTrust.com, NuView IRA, that the way to long-term wealth and the way to being more tax advantaged is through a self-directed IRA. So go check them out. And if you have any questions for me, you know how to do that too. Or you can also go to thinkrealty.com. Until next time, happy investing.